All right, it looks like we have a good number of people on, and we do have quite a bit to cover today, so we can go ahead and get started. Thank you so much, everyone, for joining today. It looks like we have a great number of people on. Uh, I hope many of you received our email today reminding you all about this webinar. We are trying to be more regular about sending out those reminders. We do host this specific webinar every other week. So every 2 weeks on Wednesday, we do host this webinar for all of you. We are going to try and make it more routine to send out reminders about this. We really do encourage you to join these if you have any questions. We're trying to refresh our content, keep it fresh for all of you, as we really do enjoy these sessions and hope that you find them as useful as we do. Before we jump in, just a few housekeeping things. First, we want all of you to know that this workshop is being recorded and informational materials will be available afterwards. So typically about 24 hours after we wrap up, we will send out a follow-up email, which will include links to our YouTube channel, where all of the recordings are posted. We'll also provide some more resources to answer any questions you have and help you get started with your Savi account if you're new. If you have any questions, please feel free to put those in the Q&A. We will take a few breaks to answer questions out loud throughout the presentation, and then at the end, with remaining time, we'll answer questions as well. Finally, if you need to use closed captions, I'm sending a link in the chat right now with instructions on how you can turn those on. And just one more thing before we continue, in order to make these sessions as useful and productive as possible for all of you, I just launched a poll that we would really appreciate if you could let us know, giving us some feedback on how you're joining this webinar and whether or not this time is convenient for you, because we really do want to make these as useful for you as possible. So please feel free to answer those quick 4 questions, and then we will get started. Great, thank you so much. I'm seeing lots of responses come through. We really do appreciate your feedback on this. All righty, I will leave that up, but we can go ahead and move on in case there are any last-minute answers. Thank you again for joining today. My name is Jobe, and I am the Senior Associate of External Affairs and one of the borrower advocates here at Savi. I do host a lot of these workshops. I'm constantly interacting with all of you, kind of on the front lines, seeing what's going on with borrowers, doing my best to advocate for you all so that we can make Savi as useful as possible for you. During today's session, we'll go over an introduction to who Savi is, and then we will spend a good amount of time covering all of the basics of federal student loans. So we'll talk about all of the building blocks like student loan servicers, loan types, and different forgiveness programs. After that, we'll cover some quick policy updates regarding recent changes to some programs, and then finish with an account overview on how you can get started to us. For those of you new to Savi, here is a quick overview of what we do. We are a public benefit corporation, which means it exists in our mission and our charter statement that we are here to serve the public. Borrowers are our #1 priority here. We are focused on helping you manage your loans and making sure that they are not a burden to you. We're run by experts and advocates that have over 2 decades of experience, and many of us also have student loans of our own, myself included. I also have my own student loans. So we have firsthand knowledge. We are familiar with the student loan process. It helps us to better serve you. And finally, we're focused on savings. It really is our goal to help you find as many savings as possible, especially through programs like income-driven repayment plans and public service loan forgiveness. Savi and TIAA are working with all of you to help you find the best outcome for your loans. So Savi is offered as a benefit to all of you through your employer. We like to think of ourselves as your student loan benefit, helping you manage them, find options to make it easier to manage them, and handling any and all concerns with your student loans. We help simplify and digitize the process of seeing what you qualify for. So all within your Savi account, you'll see different options for different ways to manage your loans. We'll show you different programs that you qualify for, ways to lower your monthly payment, and it can all be done digitally through our website. Many users working with us reduce their student loan payment by about $150 per month and receive about $20,500 in loan forgiveness. And best of all, We just have one application for you to complete. And after you do that, you'll see personalized options showing you your eligibility for every program we will discuss. So enough about Savi, let's jump into those basics. In this section, we'll talk about all of the building blocks of student loans. So we'll talk about different student loan servicers, the different types of loans that are available, income-driven repayment plans, and public service loan forgiveness. I already see a few questions popping up, so after we cover this section, we will take a break to answer your questions out loud. Starting off with student loan servicers. These are companies that manage student loans on behalf of the Department of Education. They handle all the administrative work. So these are the companies that you submit your applications to, you make your student loan payments to them, and for many borrowers, they are your first point of contact when working on your student loans. You can see some of the most common servicers are some companies like Nelnet, Ed Financial, and Advantage. We like to clarify that Savi is not a loan servicer. Instead, what we do is work with you and your servicer to help you take advantage of all of these options. So the servicers are in charge of running all of the programs we will discuss. And historically, it's been confusing to navigate on your own as a borrower. So that's why Savi is here. We're here to help you enroll in these programs with your servicer, make sure that things are processing the way they're supposed to, and we will work to ensure that you are getting the best outcome with your servicer. One of the first questions we get from borrowers at this point is, can I qualify for these programs if I'm with Great Lakes, or can I qualify if I'm with Nelnet? And for these programs, you can qualify no matter which servicer you're at. All of the servicers manages the loans the same way, so no matter who your servicer is, you could enroll in these programs. The determining factor is the specific type of loans that you have. So let's take a look at some of those. In general, there are two broad categories of student loans that are offered. There are federal student loans and private student loans. For all of the programs that we will discuss, these are federal programs which require you to have federal loans. So you can see all of the federal loans are highlighted here in green. The first type of loan, and the one that is currently offered, are direct loans. This is the current program offered by the Department of Education, and it started in 2010. A direct loan comes directly from the Department of Education. And this also includes direct consolidation loans. So if any of you consolidated after 2010, you likely have direct loans. The great benefit of having this type of loan is that it is eligible for programs like income-driven repayment plans and public service loan forgiveness. You're actually required to have direct loans in order to enroll. So if you already have direct loans, it means that you already have met one of the necessary requirements. Before direct loans, there were FFEL loans. This stands for Federal Family Education Loans, but we just call them FFEL loans for short. These are an older type of student loan, so if you have any loans from before 2010, there's a very good chance that they are FFEL loans. The important thing to note if you have this type of loan is that it is only eligible for one income-driven repayment plan, specifically called IBR. If you want to make your FFEL loan eligible for all of the plans and make it eligible for PSLF, you'll need to consolidate it. When you consolidate a non-direct loan like a FFEL loan, it is converted into this direct consolidation loan, which makes it eligible to enroll in all of the programs. Next up are PLUS loans. And there are actually two different PLUS loans that are offered. The first one we'll talk about are Parent PLUS loans. And I think these are absolutely the trickiest student loans that are out there. There are a lot of extra requirements that apply just to Parent PLUS loans, and they can be more difficult to navigate on your own. So if any of you have Parent PLUS loans, listen up, this is the part for you. The first thing to know about a Parent PLUS loan is that it is a loan taken out in the parent's name to pay for the child to go to school. Because the loan is in the parent's name, this means the parent is responsible for repaying it. Repayment would be based on the parent's income and forgiveness would be based on the parent's employment. Unfortunately, there is not currently a way to transfer a Parent Plus loan to the student. Since the Department of Education considers it the parent's responsibility, we do as well. If you have a Parent Plus loan, it is eligible for forgiveness, but you have to take a few extra steps first. A Parent Plus loan will need to be consolidated into a direct consolidation loan. After that, it can only be paid on one specific plan called ICR. But once it's been consolidated and enrolled into the ICR plan, it would then earn progress towards forgiveness and eventually be forgiven down the line. So because of those extra requirements of being in the parent's name, needing to be consolidated, and only eligible for one repayment plan, that is why those parent loans are a little bit trickier to work with. The last type of federal loan, thankfully, is a little bit easier and straightforward. A Grad Plus loan is a loan taken out in your own name to pay for your own graduate or professional program. These are considered direct loans and are eligible in their current form, meaning they do not need to be consolidated. So those are the federal loans. The big takeaway is that the goal is to have direct loans. If you have these FFEL loans or these Parent Plus loans, you can consolidate them, which will convert them to direct and make them eligible for all of the programs. Finally, the last type we will discuss are private loans. Private loans are any non-federal loans made by lenders like banks, credit unions, state agencies, and even schools themselves. Unfortunately, if you do have a private loan, it is not eligible for any federal repayment or forgiveness program. Only federal loans can qualify. So unfortunately, if you do have private loans, we cannot enroll them into programs like income-driven plans or PSLF. It is possible to make a federal loan into a private loan through the process of refinancing, but we don't recommend this because if you do that, your loans would become ineligible for all of these programs. There also, unfortunately, is not a way to convert a private loan into a federal loan. If you have a private loan, it is stuck that way. Any of you who have a mix of both federal and private loans, you can enroll any federal loans that you have into these programs, and we can assist you with getting them on track for forgiveness. So next up, let's talk about one way that you can repay and even get your loans forgiven, which is through an income-driven repayment plan. There are 4 different plans that are offered in the income-driven category, and these are Save, Pay, IBR, and ICR. Each one of these plans has very similar names and calculates your payment a little bit differently. So depending on which of the plans you're enrolled in, your payment will be anywhere from 10 to 20% of your discretionary income. This means that your payment is based directly on your income and your family size. So for many borrowers, they are a very affordable option. These are great options for borrowers who have a lower income or a high student loan balance. For example, say that you're single, you have no dependents, and your income is about $52,000 a year. You could expect to see a monthly payment of $160 if you enrolled into an income-driven plan. These plans do also not base your payment on your total income, only a percentage of it called the discretionary income. Basically, what the Department of Education does is they set aside a portion of your income to cover the essential costs of living. The leftover amount is called discretionary income, and that is what your payment is based on. As I mentioned, these are great options, especially for low-income borrowers. In some cases, if you have a low income or even no income at all, you could be approved for a $0 monthly payment. During this time, you would not be required to make payments on your student loans, but they would stay in good standing and you would continue to earn progress towards forgiveness. So these are great options. Depending on which plan you're enrolled in, you will have a repayment period of either 20 or 25 years. After you've paid for that amount of time, if you still owe a loan balance, the remaining amount, including interest, is forgiven. So by design, these plans work best if you minimize your monthly payment. The less you pay now, the higher that balance will be after the 20 or 25 years, meaning the more forgiveness you receive. Our unofficial motto here at Savi is to minimize your payment to maximize forgiveness. If you receive this type of forgiveness before 2025, it will be tax-free. After that date, though, the amount of forgiveness you receive will be considered taxable income for the year that you receive it. And finally, when you enroll into an income-driven plan, you'll be approved for a payment amount for up to 12 months. After that amount of time, you will need to recertify your income. That way, if your income has changed, your payment can be updated so it stays at the 10 to 20% range. You can recertify by submitting a form online or by calling your loan servicer. And the last thing we will discuss in the basics section is public service loan forgiveness. This is the main program that we help borrowers apply for here at Savi. And I know lots of people always have a lot of questions about it. There are a lot of requirements that go into it, so I'm going to do my best to break it down and make it as easy as possible to understand. In general, there are three main requirements that you need to meet to qualify for Public Service Loan Forgiveness, or PSLF. The first and perhaps most important requirement is to work at a qualifying employer, meaning that you need to work in public service. A qualifying employer is a government organization at any level. This can be federal, state, local, or tribal government. If you do not work for a government organization, you can also work at a not-for-profit 501c3. As long as your employer is one of those two types, you could qualify for forgiveness. This program is not based on your job role, meaning any type of employment at these organizations could qualify, ranging from a custodian to an administrator, a teacher, whatever it may be. Any work for these types of employers could qualify for PSLF. With that said, you are required to work at least 30 hours per week. The PSLF definition of full-time is 30 hours or more. So anyone working 30 hours or more will be considered full-time for this program, even if you're not considered full-time by your employer. For those of you that are below 30 hours and are part-time, there's still a way you can qualify. If you're working for multiple employers at the same time, you can stack that employment so that you can reach the 30-hour threshold and qualify as well. The second requirement is that you need to have qualifying loan types. To enroll in PSLF, you have to have direct federal loans. Thinking back a few slides to the chart of loan types, that is the first column. If you have any non-direct loans like FFEL loans or Parent Plus loans, you can consolidate those. That will convert them into a direct consolidation loan, making you eligible to enroll. And finally, you are required to pay your loans on a qualifying repayment plan. For PSLF, as long as you're enrolled in one of the 4 IDR plans that are offered, your payments will count towards forgiveness. This means that you can enroll in the SAVE plan, the PAY plan, the ICR, any one of those 4 plans. As long as you're enrolled and you make your payments on time and for the full amount, your payments will count towards forgiveness. The other really great benefit of this is that by paying on an income-driven plan, you are simultaneously earning progress towards forgiveness under both programs. This means that the payment that you make will count towards IDR forgiveness, forgiving your loans after 20 or 25 years. But the payment will also count towards PSLF, which gives forgiveness after 10 years. So it's great because you're working towards PSLF, but if something happens, you still have IDR forgiveness as a backup that you've been earning progress towards. In order to actually earn the forgiveness under PSLF, you have to make payments for 10 years, which is equal to 120 payments. Each payment you make has to meet all 3 of the requirements that we've discussed, meaning each payment has to be made while working in public service, while you have direct loans, and while paying on an income-driven plan. If you make a payment that does not meet all 3 of the requirements, it might not count towards forgiveness. This also means that simply working in public service will not let you get this forgiveness. You must be actively working and paying in order to earn progress. Once you've made your 120 payments, though, whatever balance you still owe will be completely forgiven, including interest. So whether you owe $1,000 or $100,000, the entire remaining balance is forgiven. Believe it or not, we just heard back from someone last week who was a teacher. She received forgiveness for making payments for 10 years, and she received $300,000 in loan forgiveness. That is by far the record for the most forgiveness we've ever seen here. Before that, the record, I think, was around 200,000. So this is a great program, especially for those of you working in public service with large loan balances. The other great benefit of PSLF is that this forgiveness is not taxed. Whereas income-driven forgiveness could be taxed in the future, PSLF forgiveness will never be taxed at the federal level. The payments you make also don't need to be consecutive, just cumulative. 120 payments is a lot of payments to make, and many borrowers have gaps in their repayment history. If this is your case, that's perfectly fine. Once you've earned 120 cumulative payments, you'll then qualify for loan forgiveness. Because of that, it could take you longer than 10 years to earn enough credits towards forgiveness. But on the flip side, it will be a minimum of 10 years before you can qualify. You cannot make extra payments to qualify sooner. They will only ever count one payment per month, meaning at a minimum, it is going to be 10 years of working and paying before you can get this forgiveness. And the last thing to know about this program is how to apply. There is an all-purpose, all-in-one form for the PSLF program called an Employment Certification Form, or ECF. This form proves that you work in public service and gives you credit for the past payments that you've already made. So the way it works is that your employer signs this form to prove that you work in public service. You then turn it in to the servicer that manages PSLF called MOHELA. They will then move your loans over to them if you're not already with them, and they will go through and count up all the payments you made while working at that employer. You'll then get credit for each payment you made while working there that meets the requirements. MOHELA will only look at payments for employers that you turned in forms for. So if you have multiple employers, you'll need to turn in a form for each one of them to get credit for all of your payments. Once you've submitted this first round of forms, you'll be able to get credit for any past payments you've made. So this means that many of you that are working in public service could already have payments counting towards forgiveness. And all you need to do is turn in an employment certification form. Moving forward, Savi recommends that you turn in a new form every 12 months to get credit for another year's worth of payments. Employment is not automatically recertified, and you have to turn in new forms to prove that you kept working. Because of this, some people choose to wait until they've made all 120 payments to apply. But if you do that, it leaves you tracking down employers from over 10 years ago, and it's more likely something could be missed. By turning in a form once per year, you can get credit for a year's worth of payments, track your progress towards forgiveness, and ensure that you're staying on track. In the worst case, if anything does go wrong, it's much easier to fix in the moment rather than years later. All right, we've reached our first break for questions. I see a lot have popped up. There are over 50 questions in there already. I want to preface by saying I likely will not be able to get to all of them, but I'm going to do my best to answer as many as possible. So we'll spend a few minutes answering some questions before we move on. First says, the SAVE plan is more beneficial to us than the PSLF plan. Savi detects that and switch us. Yes. So what we do, and I'll show you how this works coming up soon, is we will compare every option available to you. And then we'll show you whichever one can save you the most and get you the most forgiveness. That way, you can lay out all your options on the table and pursue whichever one is going to get you to forgiveness the fastest or give you the most forgiveness. The next one says, I have direct loans, but they are for 2 different universities and 2 different students. Is there a way to separate or consolidate them? So you have a few options. You could consolidate them all into one loan so that you have just one loan with one payment, or you could choose to keep them separate and consolidate them individually. So you would have 4 separate loans. Savi can help you compare all the options and find whichever one is the best. Typically, merging them all into just one with just one payment tends to be the easiest. But we can definitely take a closer look at your situation, find the best option for you after you've started your application. Next up says, I just had my payments updated and I now have over 120 credits for PSLF. How long should I expect to wait before I get the notification they've been forgiven? First off, congratulations on loan forgiveness. That is really exciting, and we're always so happy to hear anytime someone meets and gets across that finish line. I will say right now, servicers are extremely backed up, and they've told us that it could take up to 90 days from the time you receive your results to the time the forgiveness goes through. So be prepared to sit tight. But the good news is that a forbearance should be applied to your account so that you don't have to pay while you are waiting for the forgiveness. Someone says, if I'm already in Save and I know how to do PSLF, does it still make sense to sign up with Savi? We always recommend it just because it doesn't hurt to have someone double checking everything for you. Even if you've already started the process and you're already turning in forms on your own, we can still make that process easier for you by turning in the forms for you, double checking to make sure everything's right, and just helping you get a better sense of where you are and how far you still need to go. My servicer was Navient, but I'm still getting mailings from them. I don't know who my servicer is. How can I check that? If you go to studentaid.gov, it will show you under your loan details who your servicers are. So you can log in at studentaid.gov to find out who your servicer is. I'm also seeing a few questions in here from returning Savvy users about how our applications and plans reset. So our applications follow the calendar year, similar to your taxes. The theory is that you have to enroll and renew your income-driven plan and your forms once per year. So our website is set up to do that. If any of you were working with Savvy last year, our applications reset on January 1st, meaning now it's a new year, a new application. Once it is time for you to recertify, everyone has a different recertification date depending on when they enrolled. You can then start your application to submit forms to renew your income-driven plan or submit new PSLF forms. So if you were working with Savvy last year, you've come in and there's a new application for you to start for 2024, don't panic. Just know that it's the same one you've already done. It's just for you to renew and stay enrolled once it's time for you to recertify. Great question. If I am enrolled in an income-driven plan, do I have to notify my loan servicer if I receive an increase or a decrease in income? So the income-driven plans are designed to be as beneficial and affordable as possible. When you enrolled, you'll be approved for a payment amount for up to 12 months. If your income decreases before it's time to recertify, you can let your servicer know and they will immediately recalculate your payment to lower it for you. If your income increases, you don't have to report that right away. Instead, you can keep your payment, and then once it's time to recertify, you'll then report your higher income. That way you can keep that lower payment for a little bit longer. So in short, if your income decreases, you recertify right away to get a lower payment. If your income increases, you wait until it's time to recertify. For IDR plans, does income include the spouse's income? That depends on your tax status. If you are married, filing jointly, your spouse's income will be included. If you are married filing separately, it will just use your income. Why is forgiveness 20 to 25 years instead of 120 payments? That is because these are different forgiveness programs. Income-driven forgiveness will forgive your loans after you've made payments for a total of 20 or 25 years. PSLF will forgive your loans after you've worked in public service and made payments for 10 years. So by being a public service employee and qualifying for PSLF, you can receive that loan forgiveness sooner than simply paying on an income-driven plan. Next, great question, which is something that we have heard a few cases of. Someone says, my loans were forgiven as part of the one-time account adjustment. My servicer shows a $0 payment, and so does student aid, but the loans are still on my credit report. What can I do? I would recommend reaching out to the Consumer Financial Protection Bureau, which is CFPB. They are a government organization which monitors servicers, credit bureaus, things like that, and they can assist with getting those forgiven loans off of your credit report. Are Grad Plus loans covered by PSLF? Yes, Grad Plus loans are eligible in their current format to enroll in PSLF. All right, I know there are more questions, but I don't want us to run out of time. So I'm going to take a pause so that we can get through some more material, and we'll have another break coming up soon. Next, we're going to go over some quick policy updates that are affecting borrowers. So we'll talk about the resumption of payments, the SAVE plan, and some account adjustments. So if you didn't know, payments have resumed. Last fall, payments resumed for all federal student loan borrowers. Interest resumed for everyone in September, and everyone's first payment was due in October. Each month, your servicer will send you a bill notifying you of your payment amount and due date. If you do not know who your servicer is, you can log in at studentaid.gov to see your servicer and their contact details. The other thing to know about the payment pause is that this time will count towards public service loan forgiveness. So this is a great opportunity for borrowers that were working in public service during the payment pause. The way this works is that going back to March of 2020, for every month the payments were paused, but you continued working in public service. You can count that month as if you made a payment, which will help you continue your progress towards forgiveness. Now that the pause is over, that is over 40 months that you could get credit for. All you need to do is turn in an employment certification form for the employers that you worked at during that time. The one catch with that, though, is it is only months where you would have been making payments if the payment pause didn't happen. This means that if you were in school and your payments were paused, or if you didn't have the loans yet, you wouldn't be able to count that time. You can only get credit for months where you were working and would have otherwise been making payments. And again, all you need to do to get credit for it is turn in an employment certification form for the employers that you worked at during the pause. Next up, the SAVE plan. I saw a few of you had some questions about this, asking about the forgiveness timeline. So we're going to cover that for you right now. Last year, the Department of Education released the new SAVE plan to help lower monthly payments for borrowers. This is in place of repay. So if any of you were on repay, you've now been moved to SAVE and had your payment recalculated. The biggest benefit of SAVE is that it covers any unpaid interest to prevent your loan balances from increasing. As long as you're enrolled making your minimum monthly payment, if that payment does not cover all the interest that accrues, the Department of Education will cover the rest of it for you, preventing your loan balances from increasing. This plan is also changing how monthly payments are calculated. So they've raised the amount of income considered non-discretionary, which helps protect more of your income from being included in repayment. A much easier way to think about this is that no borrower earning less than $15 an hour will have a payment on the SAVE plan. Borrowers earning more than $15 an hour will still see savings since less of their income will count when calculating their payment. There was an announcement on Friday by the Department of Education that they are moving up the implementation of some benefits. So it wasn't supposed to start until July, but starting in February, there's going to be shortened timeline to forgiveness for some borrowers. When you originally took out your loan, if you originally borrowed $12,000 or less, you will only have to pay for 10 years before you qualify for forgiveness. So this is down from the current 20 or 25 years. If your total balance was $12,000 or less, you only have to pay for 10 years on the SAVE plan. So if any of you had a lower original balance, this means that you could enroll into the SAVE plan right now and get that forgiveness as soon as next month. Later this year, they will be making even more adjustments. So in July, they'll be lowering payments even more. If you have only undergraduate loans, you will pay only 5% of your discretionary income. If you have grad loans, you'll stay at 10%. But if you have a mix of grad and undergrad, you'll pay between 5 and 10%. So basically, anyone with undergraduate loans will see more savings starting this summer. The great news, you can enroll and save right now, and you can do so through Savi. And final update for you are some updates on the account adjustments. The Department of Education is going through everyone's accounts, and basically they are giving you credit for past periods of time that didn't typically count. This could be because the payments you made didn't meet the normal requirements, you didn't make payments, whatever it may be. But they're going through and making some adjustments to help everyone get closer to forgiveness. Specifically, they're giving you credit for any time where you were in repayment, even if the payment was on the wrong repayment plan, if you had the wrong type of loan, or if it was late. They'll also be giving you credit for extended periods of forbearance. So if you were in forbearance for more than 12 consecutive months or 36 cumulative months, those times will be adjusted and counted as if you made payments. And they're giving you credit for any deferments before 2013, the exception to that being in-school deferments. These adjustments are going to be automatic and they are already happening, but they're only happening if you have the correct type of loans. So to be included, you must have direct loans or FFEL loans that are managed by the Department of Education. This means that if you have loans like commercially held FFEL loans or HEAL loans, you are required to consolidate to get these adjustments. Here at Savi, we are recommending that anyone with FFEL or Parent Plus loans consolidate their loans. You have to consolidate by April 30th to be included in the adjustments. If you have the wrong loan types and you don't consolidate by that date, you will miss out. So we encourage you to check the type of loans you have, consolidate if need be. That way you can get these adjustments. If you're not sure what type of loans you have, you can add your loans to your Savi account and we will check and let you know if they need to be consolidated. We will also be doing a lot more communication around this deadline, notifying everyone who needs to consolidate and helping you get that done before the deadline. All right, time for another break for questions. This one is going to be shorter because we only have about 15 minutes left, and I want to make sure that I walk through getting started with Savi for those of you that are new. Is there an income cap to qualify for that income-driven plans? There is not. No matter what your income is, you can enroll in an income-driven plan. Keep in mind, though, that typically a higher income does mean a higher payment. Does our forgiven amount get taxed at the state level? In most cases, it does not. Some states have laws preventing the taxing of loan forgiveness, and there are many states that don't have laws on it that simply don't tax it. I believe there's only a small number of states that do tax it. I'm not familiar with them off the top of my head, but I would encourage you to reach out to our support team and we can definitely look into it for you. But I would say in the majority of cases, any loan forgiveness you receive is not taxed by the federal or state right now. What is the consolidation process to get my loans to direct? To consolidate your loans, you submit a consolidation request at studentaid.gov. You select all of the loans you want to consolidate, and basically what happens is they are merged into one loan and a new direct consolidation loan is issued. At that point, you would then be eligible to enroll in these programs. Savi can identify if you need to consolidate and help walk you through that process. So if you need to consolidate, we'll let you know and get the loans consolidated for you to make that process as easy as possible. If I have Parent Plus loans and my child is still in college, should I end the in-school deferment early and start PSLF now? So this depends on your situation. If you are currently working in public service and you'd like to start earning credits towards forgiveness now, you can end the in-school deferment and start paying. That way you can earn credits immediately. Keep in mind though that this does mean you're going to be required to start paying on your loans right away. If you'd like to wait till your child leaves school, you can. Just keep in mind that that's going to push out your forgiveness timeline. So say you take them out of deferment right now, it's going to be 10 years from today. If your child doesn't graduate for another year, that means that it's going to be another year before you'll start earning progress. You can reach out to our support team where we can help weigh the pros and cons for you and determine if you want to start now or hold off. Who should sign my employment certification form? Great question. This is typically done by people in the HR office, but it could also be a manager or a supervisor. And one of the benefits of using Savi is that we have a huge database of employers and contacts. I believe we have over 1 million employers in our database, and we are able to send your form to the correct contact to know who needs to sign it and get it done as soon as possible, especially for employers who offer Savi as a benefit. So if any of you are wondering about getting your employer to sign your form and your employer is the one who's offering Savi to you, we know exactly who to send that to in the office to get it signed and submitted as soon as possible. Alrighty, I know there's more questions. I do apologize that I'm not able to get to all of them, but I want to continue so that we can get through the rest of the material. As we've seen with these programs, they can be very helpful, but there are a lot of requirements and they can be confusing. They are bureaucratic and complex, and it can be difficult to navigate on your own. This is exactly why Savi is here and what we hope to help you with. With Savi, you can see personalized repayment and forgiveness options. So we'll show you and compare all the options, letting you see the income-driven plans you qualify for. If you qualify for PSLF, you'll even be able to see what your specific payment would be on different plans. We'll help you find the best one and enroll to find the most savings. We also monitor for new programs and policy changes. Anytime you have questions about what you qualify for or new changes are made, we will update that for you so that you can take advantage of all of the savings. We remind you each year when it's time to recertify your income-driven plan and your PSLF applications. You can also sign and submit all of the paperwork through your account. So we will digitally create any necessary applications and take care of submitting them to your servicer to make this process easy. And best of all, you can receive personalized support from our student loan experts. We're able to help with all of your student loan concerns, big or small, helping answer any questions you have and ensuring that you're on track for forgiveness. Once you have access to your Savi account, this is what your main dashboard will look like. It will let you access your main application for the year and see any action items that are needed from you. You'll also be able to invite friends and family to use Savi. So if any of you know others with student loans, you can enter their email, send them an invite, and they can sign up for Savi as well. As an added benefit, if you invite 3 or more people to use Savi, you'll get 50% off of our premium membership. They don't even need to sign up for Savi. You just need to send them an invite and you can receive that discount. So speaking of that essential plan, here at Savi, we do offer different membership levels. It is absolutely free to create your account and see what you qualify for. With our free DIY plan, you can even submit the forms on your own at no cost. If you want to unlock all of the features of Savi, though, you can enroll in our Essential Plan, which is our most popular plan. This includes letting us create and submit all necessary forms for you, monitoring your loans to keep you on track for forgiveness, and even giving you access to that one-on-one support. This is really beneficial right now, especially when there are changes to student loans happening every week, when there are delays with servicers and issues happening. The essential membership can help relieve some of that stress and make the process easier for you, as our student loan experts can help out with any concerns and ensure that you are getting the best outcome possible. You can click select a plan from your Savi dashboard, or if you already have a Savi account, you can scan this QR code to go right to the upgrade page. Some employers do even offer discounts on the essential plan, so we encourage you to click select a plan, check out the options, and enroll in the one that is the best fit for you. Our application will then ask for all of the information we need to provide you with estimates of what you qualify for. So you'll enter your family information and your income information. That way, we can calculate what your payment would be on an income-driven plan. Next up, you'll then add your employment information. You can add all current and past employment to see if they meet the requirements for PSLF. We encourage you to add all current and past employment so that we can get a look at your entire situation and get an accurate estimate of your progress towards forgiveness. After that, you'll be able to add your loans to your Savi account. I think this is perhaps the most important page of the Savi application, because adding your loans lets us see your situation and figure out what options you have. The easiest way to add your loans to your Savi account is to link it with your student loan servicer's account. You can sign in with the same username and password, and it will sync the accounts to give us a glimpse into your situation. Adding your loans this way does not take any action on them yet. It just gives us information on your loan types, your balances, and your repayment history, so that we can see what's going on and see what's available. For those of you concerned or asking about consolidation, this is the important step for you, because once you've added your loans onto this page, we will identify if you need to consolidate. We'll then let you know and walk you through the process to get them consolidated. But if you haven't added your loans, we don't know what type you have, and we won't know what options are available. So we really do encourage you to at least get to this point. Finally, that page everyone wants to get to, the results. On our results page, you'll see exactly what you qualify for. So we'll show you each income-driven plan available, forgiveness programs, and you can see things like what your monthly payment would be, how far along you are towards forgiveness, and how much forgiveness you can receive. Our website will automatically recommend the plan that saves you the most and gets you the most forgiveness. But if you want to see every option available, you'll be able to compare those to find the best option for you. You'll also be able to see things like which forgiveness program you are pursuing, whether you're going to pursue forgiveness under an income-driven plan or PSLF. And in many cases, the best option will be bundling. So if you remember PSLF, how you're required to enroll in an income-driven plan, these results will also show some scenarios like that of what it would look like enrolling into an income-driven plan and pursuing PSLF. It's really comprehensive, it's really great, and will show you every option available to you. Once you've found the one that you're ready to enroll in, you can click continue to start on your applications. This is where that essential membership really comes in handy, because as an essential member, we will create any necessary applications and submit them for you. If you're applying for public service loan forgiveness, we'll create the forms for you and take care of submitting them to your employer to be signed. Once they've signed, we'll then submit them for processing. If you're enrolling in an income-driven plan, we'll also create that application, and we'll take care of submitting it to your servicer to enroll you in your selected plan. Believe it or not, the number one reason that applications are denied is because they are filled out incorrectly. It's not because you didn't qualify, it's because there was an error on the form. But by being an essential member, we pre-fill these forms to ensure they are completed correctly and have the best chances of being accepted. We actually have a 98% success rate for forms submitted using our essential membership. Once you've created those applications, you can track all of their statuses on your dashboard. You can see what step of the process each form is on, and if there's any action needed from you to get them to 100%. As you work through the application, if you have questions, we're always here to help. You can reach out to our Help Center, which includes articles on common student loan topics, frequently asked questions, and even videos walking you through our website. If you are an Essential member, you'll have access to support, where you can get one-on-one personalized help with your situation. So if you ever need any help, please don't hesitate to reach out to us, and we are always here to help and more than happy to do so. So if this is all great and you're ready to get started, you can sign back into your account today. If you are new to Savi and don't have an account yet, you can either scan this QR code and sign up now, or check your email after the session for instructions on activating it. Wrapping up, I will leave you all with some next steps. If you don't already have a Savi account, be sure to create it so that you can get started right away. If you already have your account, you can log back in anytime to get started. We encourage you to enroll in our Essential membership to unlock all the features of Savi and get access to those benefits like one-on-one support for any student loan concerns. Complete your applications to see what you qualify for, and don't hesitate to reach out if there's anything we can do to help. So thank you so much, everyone, for attending. That is all the material that I have for you today. I hope that you found this useful. We will be hosting another session this afternoon at 4 to talk about the SAVE plan in more detail. And we'll also be hosting the same session 2 weeks from now on Wednesday. So thanks again for attending. I appreciate your time. With the few minutes that I have left, I'm going to answer as many questions as I can. Does each eligible employer need to sign the form? Yes. If you have multiple employers, you have to get the form signed by each one of them. If I've been on an income-driven plan for the last 7 years, do those count as credits for PSLF? Yes. As long as you were working in public service during that time, those can count. Also, I am moving quickly because I want to get through as many questions as possible. So I am going to try and rapid fire these as fast as I can. Is the $12,000 or less per loan or overall? That is the overall loan balance. Total amount borrowed is $12,000 or less. If we're married, do we need to file our next taxes married, filing single, or jointly? We cannot tell you how to file your taxes, but what we can tell you is that if you file jointly, both incomes will be used. If you're married filing separately, it will just use your income. But we encourage you to talk to a financial advisor or tax consultant for the best option. What is discretionary income? That is the amount of your income that your payment is based on for an income-driven plan. So what the Department of Education does is they look at your total income and they set aside a portion of it to cover the essential costs of living. The leftover amount is called discretionary income, and that is what your payment is based on. When I consolidate a Parent Plus loan, will my payment count reset? Typically, it does. But if you consolidate before April 30th as part of the account adjustments, you'll get credit for any past payments you've made. So this is really great if you had the wrong type of loan and were making payments, because you can consolidate now and get credit for those payments without having to start over. I see a lot of people asking about meeting with a Savi representative to answer specific questions. That is a benefit of the Essential membership. So if you upgrade and enroll in our Essential membership, you'll be able to click that contact support button, reach out to us, and we can assist with any questions you have. So if you have personal questions or you need a little bit more guidance, I really do encourage you to enroll in that Essential membership, reach out to our support team. You can even mention my name, Jobe, and that will flag to them that you were on these sessions and help them get back to you sooner. So feel free to upgrade, mention my name in your message, Jobe. You can say Jobe from the webinar sent me, and we are more than happy to help. All right, I see that we are out of time, and I know there are a lot of questions that I did not get to today, so I do apologize. If you have a question I wasn't able to answer, I would encourage you to start that Savi application, reach out to our support team. I said, even mention my name, and that will help us get back to you faster. Thank you again, everyone, for attending. I appreciate your time. I appreciate your responses to that poll at the beginning, and I hope that you found this useful and that you all have a great afternoon.